Hello everyone and welcome back for another video about my pseudo trading system. Today we'll see a quick reminder about fractals, well, what they are, what they mean, and how we can use them for having an edge on the market. And we'll see about those levels which are auto-drawn everywhere on the charts. And bit of this one, mainly this one as I use now. I use it as my early system, and with confirmation with this one. It's all about that. It's all about that, but it's already a big one. So here we go. We are on US 30, which is the Dow Jones, and as you see, I'll just mark some trade I made today, and I'll explain why and on when, on all the reasons I took them. And here we are. I know you won't see the tooltips on the video recording, but I'll try to be as clear as possible. I load usually twice the same indicator, which is pivot star. I load it once with a standard D1 daily levels, and everything is drawn. It's quite clear actually. Here you have the resist. Nope, not this one. You have where are they? Okay, you have this one, which is D1S1. You have this one, which is daily pivot points. You have this one, which is D1R1. And if you go further, you have the S2, S3, L2, and L3. All these levels are considered as auto self-fulfilling levels because everyone are looking at them. So you might expect a price reversal on this side. And I load it another time with Fibonacci H4 levels, which seems to be quite efficient on US 30. So you have this one, which is H4S1, the H4S2. You have the H4S3, H4R1, R2, and I think this one, R3. All these levels are quite respected by the price, so it's a point. It's a point of interest when you see the price is coming to these levels. You might expect either a big bounce or a very strong reversal. With these levels, I use another indicator which draws some interesting levels too, which are yesterday low, yesterday high, resistance H4, support H1. All those levels are drawn. All these levels are drawn based on fractals, this one is a monthly resistance. All these levels are drawn based on fractal and price activities. So what do you need to look for? I mainly trade where there is a big move, a strong move in a direction, and when price came to an interesting level. To detect when reversal might occur, I mainly use now, it's quite a new indicator, so I'm still playing with settings, but I use this one. It's called iFisher, and I just looked at the code, but it's a bit messy, or it's nearly black magic. I don't know. It's based on moving average. So here we use 8 moving average, and all it does is just drawing a line which is oscillating between in a corridor with an upper bound and lower bound, and which are around 7 or 7.5, depends. It might move a bit, but the interesting point is that when price reach an extreme bound, it may stay in this bound. just doesn't matter. All you need to see is if the price has made a big move, and you see the fissure reached an extreme, which is 7.5, or -7.5. You on the price, the line get back in the corridor. You might expect a reversal. It's all these things. Just the point of this indicator is you might think of it like yeah, like a stochastic one, but based on moving averages. So what can we say about this? I'll zoom a bit. Let's see. Okay, I've made some trades around there. So what I just did here is I just waited for the price to move and to break some interesting levels, some important levels. This one is clearly a big one. If we zoom out, we see there was some activity around here. You have this one here. I think if we scroll back, oh, it's a bit far. It's a bit far, but usually it was to the H4 pivot points, so I just waited for the price to get back to there, and then I watched for the Fisher line to see how it reacted. We were near the lower bound, so it was a bit risky, but I just felt the price was a bit extended because it was just 9 a.m. here, and we see the price fell down until nearly 50 p.m. So it was quite a long run, and the Fisher was quite low, and the RSI was growing up. It was not growing up. It was just less lowering down. So I just took a long and waited for ticks levels to trigger, just right here. And as you may notice, just here I always have the tick chart open, because you may see the same structures on ticks as you may see on price. So here we clearly have some kind of support just right here, and we have some point of resistance here, and price may break these levels or not. It may bounce. So maybe we'll see another tests of the seller or the buyers, and then price might move down. If this level break, we might see a big move downward, or if there is a clear bounce, we might see price will have to cross that line, which is you don't see on the screen record, but there is a level just on the left on the same thing on tick levels, and if price move, we may see a clear bounce. And that's just how I watch for when I open my order. Usually I wait for 1-2 tests, and then when price come back to test again, it's when I open my order. If I have already an order but I see the price has struggled to get far, to get beyond the line, I just cut the trade, which occurred just right here. It was just here. I just opened the long, a buy one, and I waited at least for fractal to be made, but the fractal was broke by another line just after. So by another candle, sorry, just after. So this one I saw on the tick level that the price was struggling to get up, and it was not a good idea as the Fisher was still lowering. It was when I opened, it was a yellow one, which is kind of indecision one, but when it closed, it was red. It wasn't a good idea. Just after I saw the price went far down, was again lower, and this one, the line, the Fisher crossed the lower bound. Price may stay in lower bound, but this one price just move up and get back in the corridor above -7. I don't know. So this one was Okay, just went back to around 6, -6. Just went back to around -6. So when the fractal was made and the price came came up with a strong official line, I just jumped in, and because of this candle here, I stopped here because I wasn't sure that the price may have a big pullback or just a new trend, and hence I closed here. But the move was it was a 180 move, which is quite interesting and may easily double an account. But to be fair, I think I'll have stopped here, which is already a good one. It's a good point. And this one was a bit risky. It was a bit risky, but the advantage, the edge you gain when you take a strong move in a direction is either you may catch a reversal or you may catch at least a pullback. So that's why I opened this one. I wasn't expecting the price to go far stronger and to get up really higher. And I was wrong. I should have kept it. Because the price was moving quite strongly, I just set the stop loss right here on the first point. The stop loss was originally below the lower fractal, but as price was moving up, I just keep on tightening my stop loss. That's why. On the other line, if you follow up the price, the main one I should have kept too, this one. As you may see, the price just went high and higher and higher until it reached the yesterday's high and the resistance H1, and which now became the H4 R1, but at the time it wasn't there. And because of the yesterday's high and the resistance, which was already there, I just waited for the price to move, and to slow down. You see that candles are little when you compare the height of the candles. You see, those candles are tighter. They are smaller. There's not enough steam to go up more. Because the Fisher was already in the higher bound, the upper bound, I just took a long because I already had this fractal on the yesterday's high, and here you see the Fisher was already red, so the trend was moving downward. With the other open here, I had okay, for 40 points. It's a 40 points of stop loss, and the target was originally around there, so it was at 40 points. I stopped because I felt this candle could easily clear all the way out and trigger stop losses too, and that's why I stopped. But because the trend was still resuming afterward, I just kept on opening small scalps. It works pretty well. It's a 12 points, so it's pretty good. I'm fine with that, and that's why I opened here, because you see the Fisher was in overbought. It's clearly when this line reach any wherever it's whenever it's a higher, it's an upper or lower bound, it's a signal of exhaustion. The sellers or the buyers are exhausted, so you may have a reversal or at least a pullback or a throwback, depending on how the price is moving. But that's how this line is used, just to signal exhaustion of one side, which is fairly useful to not be caught in just as small as this one. You must wait for the line to cross or one of the bounds, and I found it to be pretty precise and pretty useful. It's not always the case. You may have to wait for an interesting level. as such, I didn't took this one because it was in the middle of nowhere. The price was not in an interesting level, so the percentage of success was lower. When you wait for the price to be in an interesting level, interesting zone, you may see the buyers on the sellers may just battle, and one side has to take the lead, and that's what happened here. Yeah, I should definitely have kept it. Uh, and here on the second side, you see a failure. You see a failure of the line here. It may seem at first glance as a failure, but if you open when the line cross, it's still at 10 points, nearly at 10 points. It's not great, but if you are like me and you target small target prices with around 2, 3, or even 5 points, you may have your play just with that. Here we have another example, and this one is a support on H1, and here we have exhaustion. We don't see it very well, but the line is just right here. The boundary is just right here, and the line did not cross, but we were in an exhaustion zone, and then the price just went up to 22 points, which is good. I'm fine with that. Well, we have the same. The price crossed up just a bit, not that much, but still. And I would have opened here, so it's 5-point stop loss, and okay, if we are here, if we catch the move, we have 20 points. I'm fine with that too. And depending on how aggressive you are, you may open if it's near or if it's stayed for a while and then back down. But it's clearly I use it as an exhaustion signal, and I found it pretty useful. You just have basically the mean of this line is when the price reach one of the boundaries, price have to cool down. Just that. It's the meaning of the indicator is that is the price have to cool down. It just went higher and higher and higher with no break. It's just in a straight line, and this zone adjusts as the price need to cool down, need to at least lateralize a bit to cool down and to get more steam to go upward. That's just that. As you may see just right here, well, the price went up, and when the price reached one of the, it was really near the top, but price didn't went back further too much, just a pause, a break, just a break in the trend, and then the trend resumed. That's why I mainly use when price cross one boundaries, because it's really an exhaustion signal. It's when you may expect the price to make a pullback, or at least to reverse. Sorry, it's sorry, it's on the other way. You may expect at least a pullback or maybe a reversal. If you combine a reversal possibility with an interesting zone like this, you may have great odds in your favor for nice reversal. And yeah, it was 55 points. I'll be glad to have kept it. And that's the global idea of the fish line, just as an exhaustion signal to tell you just watch the price. It may pull back or break, you don't know, and may reverse. So even if you're already in a trend in a trade, if I have kept this one, I think I may have closed it just right here, because that's when the line became yellow, which means price may reverse hardly, or it's just cool down. You see the line just cool and then resume. And that's why I use to as a confirmation signal if I'm already in a trend, but I don't like them. They are reversal trades are quite risky, because if it's a false alarm, if it's a false signal, the price may resume the initial trend, and you may get caught in a hard and strong move against your position. Okay, that's for the official line. And I see, oh my god, it's already 20 minutes. Okay, I'll try to be quick. Or maybe no. I think it will be for another video. Okay, that was for today. So if you combine, to summarize a bit, if you combine fractals with interesting levels and with an exertion signal like this, you may catch at least all the big reversals. All you have to do is to wait for very strong move in a direction, and when you see one side is exhausted and they don't have enough steam to keep the power, to keep the price moving in the side, on the side, just when you jump right in, just jump right in and wait for price to pull back, and at least hope for a reversal. That's all I have for you today, and I wish you green pips, and have a good evening, everyone. Goodbye.